Okay, today we're going to be talking about what happens when a non-citizen of the United States inherits property, such as a couple, a married couple, and one spouse is not a U.S. citizen. There's some significant negative effects from the tax rules in the area of estate tax. Normally, estate tax does not come into consideration until each spouse has 13,600,000 for 2024. That means that anything below that does not get the estate and inheritance tax. And we're not talking about income tax. So the estate tax doesn't occur that much anymore. However, if the couple if one of the spouses that's not a citizen is not a resident of the United States, then any inheritance that he or she receives will start getting inheritance tax above 60,000 of inheritance. And then the amount above that 60,000 is taxed at 40% on the IRS form 706. So it really impacts the non-citizen, in this case, non-resident spouse. Now, what I'm talking about here is not a green card. Uh, we're talking about actual citizenship. So if one spouse has a green card, lives in the United States, and then his or her spouse dies and they inherit, then this tax will be effective. And it only can be stopped later if the spouse becomes a citizen. So if the spouse that's non-citizen is a resident alien of the United States, domiciled in the United States, then he or she can receive an inheritance of up to 185,000 without having this estate tax. And the estate tax is 40% of what is received in the bequest. So it is significant. And there are ways around it, but you have to look at it being a huge amount of tax due when the citizen spouse dies and the bequest goes to the non-citizen spouse. 40% is significant. Um, there are tax treaties in the code that apply to several countries, including Australia, Canada, Denmark, France, Germany, Greece, Italy, Japan, South Africa, Switzerland, Netherlands, and the United Kingdom. But those treaties are primarily aimed at double taxation. So if you get taxed in your home country and taxed here, then the treaties might be relevant to you. This inheritance tax is a federal, not a state tax, and it is enabled by Internal Revenue Code section 2056A as in alpha. What most people do to avoid this inheritance tax when they're doing estate planning, when they're creating a revocable trust to avoid probate, they will also create what's called a qualified domestic trust. And it's abbreviated QDOT for simplicity. And this helps out quite a bit because if the citizen spouse dies, the money goes to the non-citizen spouse into this qualified domestic trust, and then it is not taxed at that point. It's only postponed until the principal out of that trust is taken out by the non-citizen spouse. So if all the money went into a QDOT trust and the non-citizen spouse starts taking money out of that, the first 185,000 is not subject to the 40% estate tax. Everything above that is subject to the estate tax that is taken out as principal from this trust. But there's no requirement to take any particular distributions. And that's assuming that it's a non-citizen spouse who's domiciled and lives in the United States. So the way it works is you set up this trust, and when the citizen spouse dies, the assets are directed into that trust. And one of the requirements of this trust system is that you must at all times have at least one U.S. citizen as a trustee. And the purpose of this is to hold some citizen responsible if the non-citizen spouse decides to inherit the money, leave the United States, and not pay any of this tax. So the non-citizen spouse can be a co-trustee, but at all times there must be a U.S. citizen trustee on this trust. Now, income that comes from this trust that is taken out for the non-citizen spouse, survivor, the income is not taxed. It's only the principal that is taxed when it is distributed. And then when the non-citizen spouse dies, then the entire balance in that account is taxed. So in effect, the inheritance tax applies to any bequest over 185,000 whenever it's taken out. And then everything else is taxed when it's taken out. So in effect, by creating this qualified domestic trust, you're not avoiding inheritance tax, you are only deferring it to the future when distributions of principal are taken out. Now, I have come across another method to avoid this tax entirely, and that is through a concept called the AB trust. It's also called a bypass trust. And the reason for that, well, let me explain what that trust is. When couples have community property, when one spouse dies, that community property is split in half. Now, we're talking about the non-citizen spouse receiving a bequest from the citizen spouse. Now, this trust, if it's split, the survivor can keep his or her part out of the trust that we're talking about here, the bypass. But half the assets would need to go into a bypass. And the reason there's no inheritance tax is because the non-citizen spouse is not the beneficiary. For example, if the kids are the beneficiaries, the non-citizen spouse is not receiving any bequest. So there's no inheritance tax. Usually there's two of the trusts are created. It's called AB. The A trust is we use the acronym, the person is above ground. The B trust is the below ground deceased person, and we're aiming that to the kids of this couple. And the surviving spouse, who's the non-citizen, can take out distributions for health, education, maintenance, and support without disrupting this structure. Now, that distribution, if it happens to be principal coming out, that rule of 185,000 distribution accumulates, and there's no inheritance tax until it goes above that. However, if the surviving spouse who's non-citizen takes out only income, that is not taxed at any point. So it's really critical that couples who have a non-citizen spouse make sure their estate plan has considered a qualified domestic trust. And the way that we create them is when the non-citizen spouse becomes a citizen, then all these provisions go away and they're not applied anymore because they're irrelevant. And then now the citizen was formerly non-citizen spouse can exclude up to 13,600. So these are ways around the estate tax for a non-citizen spouse. If you have any questions, contact our office or send us an email. Thank you.